Yeah, wear shades for every episode.
Shades are good.
And stare at the camera. That could be our shtick. Hello.
Welcome to our site.
My name is Max Headroom.
I want your boots, your clothes,
tell
and your
you about
motorcycle.
Cryptocurrency. My name is Vlad.
So yeah. So
All right,
I guess today we're gonna try to talk a little bit about cryptocurrencies in general and how one might think about them in the context of investments and transactions and
I think
how to use it in your normal daily life, really.
I think before we start down that route, though, it's worth saying that Warren and I consulted on a project recently with some of the blue chip companies, a couple of banks, about the blockchain and cryptocurrencies and how it was going to change everything. So we have a fairly deep knowledge of what's going on in the space. And it might be an idea just to start off with a little overview of how the blockchain works, what it does, and why we think, and a lot of people now think, it's going to be such a valuable piece of programming and real estate for the future.
So yes, I think the thing to do is to start with a bit of background on Bitcoin in particular, because it's sort of viewed as the grandfather of all of these cryptocurrencies, is that it was introduced by Satoshi Nakamoto. Right? Is that right?
That's the name, but it's no one seems to know who or if he even exists, or if
it's multiple people, or
yeah.
So I think there's a mythology there that kind of has to be separated from the technical underpinnings. But the point is, whoever it is, and had decided that, having suffered through the 2008 bailout and crash, et cetera, they decided enough's enough. We've been played with by these banksters long enough, and they've been stealing basically huge chunks of cash from the normal person for years. And he's decided to create a decentralized technical platform that would allow people to transact without going through third party, and thus incurring expenses and various other forms of friction that seem to be injected almost mysteriously by these banking and transactional entities that are part of that cartel.
Yes, it's worth pointing out that the underlying technology behind all this is something called the blockchain. And the blockchain is deemed to be a very secure environment. And Warren will now explain why and how.
Yeah, well, the blockchain is basically a chain of blocks, oddly enough, that are consisting of encrypted and hashed transactions that are clumped together into this block. And a block is like a math problem that has to be solved by the miners.
Everyone uses paper money. When you get a $10 bill, you trust that it's not fake. If instead someone sent you an email saying, "Here's $10, you probably wouldn't trust it. But when we transfer money, use an ATM, or pay with a deposit card, that's pretty much exactly what we do. We're sending money and a digital message. To make sure no one's cheating or sending money they don't have, these messages go through a few trusted banks that keep a record of everything. They know how much money everyone has and deduct it properly for every transaction. But this becomes expensive when there's a million transactions around the world every minute. The Economist estimates that banks charged us more than $1.7 trillion to process these payments in 2014. That's about 2% of the entire world economy. With blockchain, we can save a lot of this cost because it lets us send money just like sending an email. Instead of sending a lot of payment information through a few servers, blockchain uses thousands of personal computers on the internet. All transactions are copied and cross-checked between every computer in a system-wide accounting book called the ledger, which becomes very safe at scale. Blockchain doesn't just allow us to create safe money online, It lets us protect any piece of digital information. This could be online identity cards, voter ballots, contracts, and many other legal instruments, bringing bureaucracy into the 21st century.
Okay, so we'll just explain what the miners do within the blockchain community.
Yeah, the miners basically are machines, not people, and they're basically solving complex math problems as quickly as possible. The algorithm for the coin itself tries to keep the rate of blocks being mined at a steady 10 minutes per block. And so, in other words, if the previous block were mined at 9 minutes, then the next math problem would be incrementally harder, so that it tries to re-establish itself around 10 minutes per block. Now, these blocks, once the answer to the complex math problem is arrived at, whichever machine arrives at that answer is awarded with a bounty, which is in this case at current time 12.5 bitcoins, and these bitcoins are added to their account. They get basically a hash in their wallet that represents 12.5 bitcoins, and it starts all over again. So the solution block becomes the start of, or the genesis block of the next block. And this continues, and once a block is placed on the chain, because of the difficulty in recreating the scenario under which it was mined, it is very difficult to change after the fact, which makes it function in a way as a unerasable or immutable ledger of those transactions. Now, there are various other technical ways that one can try to game this system, but it generally works to tend toward the truth, because all of the miners, or all the machines that are mining, basically get to decide in consensus fashion which version of the blockchain is correct. So if someone tries to create a dodgy block and basically fork the blockchain, then all the other miners outvote them, and their version of the shared block becomes the truth, and it reconverges on a single strand again.
So a couple of questions here. One, where is this blockchain, where does it reside?
It resides
physically
on a copy of it, at least resides physically on every miner's.
So it's distributed ledger that's on.
It's distributed
across all the machines in its totality on each machine.
Absolutely.
Right.
So it is a complete copy, and therefore the method of voting is generally by saying, here's my copy of the blockchain, and if someone tries to do a dodgy challenge or tries to fork it, then all the miners basically just look and say, well, that's not the same as mine, therefore I reject it.
Right.
So in short, this blockchain is one of the components of a cryptocurrency, in the sense that it becomes the immutable log of the transactions that occur in that currency on that chain. Now, there are other things you can write and log to the blockchain. For example, the property register of Estonia, I believe, is on the blockchain. They've committed quite a lot of energy to creating a digital crypto country-like environment in Estonia, so you can actually get an Estonian identity card, and you can conduct transactions, and it's positively identified as you, and that sort of thing. So they embraced this quite early, and I believe are doing some groundbreaking things, hopefully that will point eventually to the ways that other countries can follow. So,
because I'm told, or I hear, that at the moment the cost to mine is about the same. It's about on a par of the reward that you're getting. So there's not a huge incentive at the moment to mine in terms of the power requirements, because it's a very power-intensive process.
Very power-intensive, and obviously it depends on the location of the miner consortium. Generally, these are done in massive mine farms which have thousands of computer-like graphics cards wired up that are running 24/7. So there is some advantage to be gained from having this located in, for example, a cold environment,
Right.
because cooling the cards directly impacts performance. In other words, if the cards get hot, they slow down. So a lot of these mining super locations are located in the far north or the far south, so that they can take advantage of the natural cooling that those
Right.
offer.
Okay.
The energy costs of the environment that you're located in also plays a good part in your profitability, because if you have a very high cost per kilowatt hour, then you will have to do the math to see if your particular mining rig or group of rigs is paying the bills and then profiting on top of that. So a lot of miners are, sensitive to this fact, and they'll shut down parts of their operation to save energy costs if the mining revenue does not warrant running them 24/7.
Yep.
So anyway, all of this is happening around the world in various places. I mean, places like northern Russia, for example, northern China, are very active, don't have high cooling costs, and the energy is reasonably cheap, primarily because they're burning fossil fuel as primary energy source, and therefore their cost per kilowatt hour is probably lower than an economy that has a part or high part of alternative energy, because cost to deliver kilowatt hour of solar energy, for example, or wind energy is still relatively high compared to coal or natural gas. So, and even nuclear, I believe.
Right.
So these factors kind of weigh into the math around deciding how much to mine, how many miners to run, et cetera, et cetera. So the miners then, based on a proof, which is the proof that they've solved the problem, this is called proof of work. In other words, they're proving to their peers that they've done the work and they solved this math problem, and the algorithm says, yes, you solved the math problem, that you get the bounty coins, and then everyone goes back to work on the next math problem. So that's generally how they get built. Now, one might say, in the context of discussing this relative to a normal, quote unquote, normal currency like a pound or a dollar, is that cryptocurrencies aren't real, and that they don't really exist as such. And the real argument here is certainly from the technical community, who are interested in trying to decentralize these transactions, is that the fiat currencies that we currently use to transact on a national basis are also not real for the most part. There's a very small amount of pounds and dollars in physical circulation in the respective economies. I believe the number is somewhere between 3 and 4% of the actual gross domestic product of a country is represented by physical currency. The rest are zeros on a screen at a bank, a central bank initially, and then fractional reserve banking partners throughout the system elsewhere. So I would argue that the bitcoins represent more of a thing than these zeros on the screen do, for the most part. So I believe that argument's a bit moot.
The difference, though, surely is that with a national currency, with a fiat currency like the dollar or the pound, the bearer undertakes to guarantee the value of the pound, whereas even if it is zero on the screen or on a computer, it's still theoretically underwritten by the government, by the financial institutions. Whereas with Bitcoin, if it was to close down tomorrow, that's it. It's all gone away. There's no guarantee. There's nothing. So how do you deal with that?
Fair enough. First of all, if it were to close down tomorrow,
first of all, can it close down?
The question is who would close it down, and,
Yeah.
and I think that there isn't an answer for that question, because the community maintains the code and maintains the infrastructure upon which the code runs in the context of the miner machines. And then the internet provides the connectivity between those machines that allows the network consensus to.
Do we have an idea of how many
make the
miners
decisions.
there are globally?
Honestly, no.
No.
It's a growing number because of the growing value. I think it's probably tracking with the Bitcoin price.
Right.
But we've had a bit of a downturn in global Bitcoin price itself, so I imagine that probably translates to some of the miners running at partial capacity.
Okay.
Although there's probably some smart algorithm somewhere that says, if you keep yours running 24/7 no matter what, even though you may lose money through the power bills in the short term, that your chances of finding them will go up because others will cut theirs off.
Yeah.
So I'm not really sure how that gets acted upon by the mining community, but it's a very dynamic and vibrant community. In terms of it going away and being turned off, I mean, these people, and not only the people that own Bitcoin, but the people that mine Bitcoin are heavily invested in its success and are not going to go quietly into the good night, because they have millions of pounds and dollars invested in equipment and infrastructure and facilities and cooling and heating and electricity and everything that they need to maintain these at the optimum temperature. And so there's a strong argument that the global mining community, as well as the global investor community who've bought Bitcoins and haven't mined them, would probably provide more stability than the decision of a central banker would in the context of a national fiat currency. Okay. Now, one advantage of the national fiat currency is that it can be unilaterally manipulated by the central bank, to the extent that if it had lost its value vis-a-vis other currencies globally, that bank could make decisions to prop it up artificially or give it a value that isn't necessarily reflecting the open market's appraisal of that currency. So those kind of things I put down to corruption anyway. So I think eventually all of that's going to air out, or the sunshine's going to purify it somehow, and we're going to come to a position where these murky stock markets and hedge funds and manipulators of our wealth are going to have a hard time continuing to do so, because there's now, I believe, current estimate is about 2,000 of these various cryptocurrencies afloat now. Each of them have their own sort of claim to fame or their own basis in issuance in terms of who's issuing and who's responsible for maintaining it, et cetera, et cetera.
But on that, so if you have 2,000 cryptocurrencies currently, and I'm assuming there are going to be more, yes. We hear, for example, that Amazon's going to release its own cryptocurrency. The Bank of England is now looking at having its own cryptocurrency. Doesn't that devalue each currency? I mean, how much, as the number of currencies spread, surely the value of, for example, Bitcoin, which was the initial currency, will devalue to nothing, no?
Well, here's my theory on this. I believe the answer to your question directly is that as long as there's a fluid and secure exchange platform for turning any particular cryptocurrency into another currency or cryptocurrency, then that fluidity should guarantee that there's always a way to spend your coins. That right. If you, for example, had a bunch of Amazon coins, and Amazon was the only one that accepted those coins when you bought books or other services from Amazon, that could be a problem if you needed to convert some to a different coin, or indeed to pounds or dollars, so you could spend it at your local greengrocer. So that's where the currency exchanges come in, because they're the ones that let you in and out of the marketplace. To be clear, with respect to liquidity and the ability to spend currencies that may not necessarily be the one that you're transacting in, I think that's where the exchanges come in. And that is where there's 2 points of control that the establishment, and I say the establishment in the sense of the current government structures who are beholden to the current banking structures, and trying to maintain the status quo. In other words, making sure that the pound is strong and the dollar is strong, and that these challenger transactional units are not taken up widely and are as frictionful as possible, so that they can't completely in a fell swoop wipe out the banking model, which I think it should eventually be anyway. What the governments do is they control two things. They control who gets to be an exchange. In other words, you apply to a government who is the host government, presumably, of your physical location, and they determine whether or not you can become an exchange and make money from doing so.
Sure.
So there's rules and regulations and controls that are placed at that point. In other words, they may say, if you want to be an exchange, you have to gather personal data from all these transactions and report it to the tax collector in our country, so that they can take taxes from these people.
Yep.
So that it can't be completely anonymous. So that's one of the rules, for example, but there are many others, I'm sure. And that's a point of control. The second point of control is a bit more decentralized in that it's based on who will accept a particular cryptocurrency as payment. So if you were able to go down to your local car dealer and buy a car with Bitcoin, or pay for your groceries with Bitcoin, I believe there would be an immediate and huge spike in its adoption. But since there's pressure because of these controls on the exchange angle, to make it difficult to do so without going through some central point of control, that a lot of people don't bother. So your local greengrocer, though, although they may ideologically love the idea of taking Bitcoin as payment for their goods, the regulations requiring them to report those transactions as Bitcoin, and also if they were to go through an exchange to turn them into pounds, would take some value out because of the exchange's cut.
Yeah.
And the exchange is limited to what they can do with that respect. In other words, the governments are forcing them to take some, and therefore they have to take a certain amount so that the playing field is leveled, so to speak.
Sure.
So anyway, all these things kind of conspire to make the friction of Bitcoin and any other coin's adoption harder, all things being considered. So the Visas and MasterCards of the world, as well as the banks of this world, don't want you using Bitcoin. And they don't want the merchant using Bitcoin. They don't want you to be able to buy a car or a house with Bitcoin, because the more people that accept it, the quicker their business model vanishes.
But the argument from the authorities is that they can't, there's so much dirty money going through Bitcoin. It's the black economy, and they have no control over where the money's coming from, whether it's being laundered, which is their argument for why they're preventing Bitcoin becoming mainstream.
Well, it's true.
There is true, yeah.
Yeah, it's true to a certain extent, but I also would argue that the black operations of governments is probably the largest money launderer in the world. Drug dealing and arms deals and you name it. And all that's off the books, and so I think they probably just don't want to be competed with in that context. Personally, I feel that income tax is immoral and shouldn't be taken, but it is. And I believe I read some study that says 80% of everything you earn goes away in some form of tax or surcharge or value-added tax, etc. This threatens all of that. This threatens the big governments and the hegemony over the earning and payment of tax from their citizens. It puts everything back into question. In other words, if you want to talk about the value you get from government, now we have some basis of comparison. In other words, am I getting a good deal on my National Rail ticket that costs me 180 quid just to go to Bath and come back in the same day from London? Mm-hmm. Many would argue no. If you go to to Germany or other countries in Europe, yeah, that same amount of money will get you a lot further and back. So I think there's a lot of conversations to be had. Clearly the media is being paid to keep us from focusing on these questions and aren't really giving us that to talk about. And most people are just more fascinated with the fact that if they bought Bitcoin or they had Bitcoin from the early days, it's now worth a relative fortune. Others are talking about the fact that they bought it at 14,000 pounds per Bitcoin and now it's 5.
Mm-hmm.
But the real questions are a lot deeper and a lot more far-reaching than that. And I think what we should do as a global citizenry is think about this as an opportunity for us to transcend, in many cases, these control points and have something that's ours and allow us to transact freely from person to person or business to business without some gatekeepers taking their share and telling the tax man where everything else is. So, but that's an opinion. Don't necessarily have to go with that one. The other currencies that are sort of interesting as far as I'm concerned by market cap and also by function is the second most valuable by market cap is Ethereum. And Ethereum has a bit of a unique position in the sense that it is not only a cryptocurrency in its own right, it's also required by the platform it runs on, its own version of the blockchain and the other parts of its network, to be used to fuel that network. In other words, there is an immediate market for Ethereum if you're using Ethereum to host your application or your site or whatever. And it's a bit more robust in the sense that Ethereum as a network can be viewed as kind of a subset of the internet, and that if you have an application, they're called dApps, digital applications, built to utilize that subset of the internet, it is available at a link just like anything else that you'd be able to reach. It has certain technical requirements that make it not browsable by our current browsers, but you need a specific type of browser or an app interface. But you basically, or the app owner basically pays Ether to run that application rather than paying pounds to host their website at Amazon. So it's created a market for its own currency, which I believe is the reason of its quick appreciation in the marketplace, and also I believe it's why it's a bit resistant to these quick drops by the Bitcoin and Litecoin and others. So I would consider Ethereum and Ether a good investment as well. Ripple is the third most valuable in the marketplace, and primarily because it is the one that's sponsored and underwritten by the very banking institutions that Bitcoin was designed to go around.
Yep.
Ripple is the bank saying, hey, we want to have our own Bitcoin, our own blockchain rather, and we're going to call it Ripple, and its symbol is XRP, and it will be the way that we can continue to take money from you as long as you're using our system, and then we can also say we're on a blockchain. It has some advantages, I suppose, in the sense that it also has a ledger, but that ledger is in a sense privately controlled and therefore not immutable. So I believe Ripple is a bit of a Trojan horse in the sense that it is a network for banking transactions or banking-like transactions, yet it's controlled by a consortium of bankers whose interest is not served by decentralization.
Mm. So at the moment it's being used for interbank transactions, right?
It's used between banks
to
do stuff that they would normally do by backs or various other means of transmission.
So it's a very active coin, and its value seems to be fairly stable compared to most.
Well, yeah, it's been quite volatile lately. It was 25p not long ago, and then it went up to like £2.50, and now it's back down to 56p this morning.
Oh.
So it is it's prone to speculation runs in the sense, but I suppose what I'm trying to convey here is that it's got the backing of a lot of the major financial players. So probably it's a double-edged sword. It's probably not going to disappear, but it's also subject to their control.
Sure.
So, and then there's loads of others. There's many in the pipeline. Like I said, there's 2,000 of them. And depending on what you want to use them for, each has their own claim to fame. Some are issued by vendors of merchandise, or will be in the context of Amazon, that you can spend in their store. And think about this in the context of the real world. How does this translate? Like, if you were a small community and you decided you're going to make your own version of the currency that everyone else uses in the country, you could call it the village coin and agree together that everyone in the village is going to accept that as legal tender for transactions. And that's what all these other cryptocurrencies are sort of like, in the sense
sort of tokenized bartering.
They're tokenized bartering.
Yeah.
They allow you to barter efficiently, and because of the exchanges, they also allow you to transmute your local coin, your village coin, into a pound if you need to spend it elsewhere.
So the current trend seems to be that governments globally, and increasingly they're all getting on board, are trying to close down the exchanges so that they can't control the currency itself, but they can control the exchange mechanisms to stop people putting in. So we've heard this week, for example, that you can no longer use your credit card, which is probably a sensible move, to buy bitcoins or to buy cryptocurrencies. A lot of them will be clamping down on that.
The first move, that was kind of an incremental change. The first move was a lot of the credit card providers, banking institutions, initially said, we're going to treat a purchase on a crypto exchange as a cash advance. In other words, it's an opportunity for the bank to charge you
2%.
really high transaction costs to do so. And that kind of took a while to percolate around the system, and now a lot of them just say, look, we don't allow you to use your credit card at all. And now this is being driven by the exchanges as well, because I believe they had some problems collecting some of their money from the banks that were being issued through the credit card system.
Well, interestingly, you can still use your debit cards because that's your money. So they're not trying to protect us. They're just saying, basically, if you're stupid enough to put your own money in, great, but you're not going to use the bank's money.
You're not going to leverage the bank's money.
Exactly. Yeah.
So if it's on a run and you put it in and it goes up 25%, and you have to pay 2% for cash advance, you're still smiling, right?
Yeah.
They don't want you to smile. They want to smile. So they're keeping their money to do that themselves and not letting you have it on credit. That's the bottom line.
So let's talk about the best ways to get into an investment in a cryptocurrency. I mean, should you buy the underlying coin? Should you take an option? Should you go for a spread bet? What do you think is the best way to get into getting some profit out of this crazy market? Because it's incredibly volatile. If you get it right, either up or down, you're going to make some. We have a friend who is very controlled about how he uses. As soon as he goes up by either 7% or down by 7%, he's out, and he seems to be making quite a tasty little profit. So if you're careful, there's money to be made. So what's the best way to get into this market?
Well, I think, first of all, you kind of have to give yourself a bit of time to think about it philosophically and think about what you want out of it. If you're trying to, sort of treat it as a means of making cash in the short term, you might want to question that, because it is a very volatile space across the board. In other words, if you want a quick win, you almost have to be fairly sophisticated, just like you might be in the shares and stocks market, to know how to do options and set stop loss parameters and that kind of thing. So I wouldn't necessarily advise everyone to jump in and buy it, because they might have different expectations or different thresholds of pain if the market turns down. If you need the money that you put in there in the short term, I would say don't do it, because if it does take a downturn like it is in currently now, you're just basically locking in a loss if you have to sell it to pay something that you knew you were going to have to pay. But if you have some money that literally is mad money or could be written off without causing you to lose your home or something, then that's the money you want to put in. And in that case, I would probably set up some sort of disciplined ongoing investment amount that you say, okay, every month I want to put in 50 pounds no matter what the price is, with the idea that I'm going to establish and accumulate a position in this currency. So, and with the idea that eventually it's going to go up, and eventually you'll have a choice whether to continue to hold it.
So your opinion is this is a long-term hold. Eventually, the values are all going to be up from today. I mean, there's another train of thought, which is that everything's going to disappear to zero.
Of course, and I think that train of thought is true historically. Every currency that's ever been invented, including the Roman centime and various others, have gone to zero. I have no doubt the pound and the dollar will go to zero as well. So if we're using that as a point of differentiation, I don't think there is one. I think we're just looking at a different horizon. But so yeah, everything's going to go to zero.
Okay.
You can
I was
bet
trying
on
to be
that.
nihilistic. I just meant in the sort of 5 to 10 year space.
Yeah.
Whereas if I'm invested in the Dow Jones or the FTSE, clearly I'm probably going to make a few quid. But if I'm invested 5 to 10 years in cryptocurrency, you think there's an upside, or you think, I mean, not that we should be giving.
Well,
opinions.
I think if you do take a longer term view in the sense of the 5 to 10 year horizon that you've described, we don't really have enough data yet to say what that means in the context of Bitcoin, because it came out in 2009. But I can tell you that if you had invested in Bitcoin in 2009, no matter what its price is right now, you'd still be a millionaire if you had enough of them. I think $5 in 2010 is now worth probably £1 million. So yeah, it's a bit of a discipline. I think you need to not worry about it. You need to not fret when it goes down, because it will. You need to decide how much you can put in without feeling pain, and then discipline yourself to put it in no matter what. And then over time you'll accumulate positions. If you want to get more sophisticated and start to differentiate between the currencies and say, well, I'm gonna put 20% of my mad money in Bitcoin and 20% in Ether, 20% in Ripple and 20% in Litecoin or Monero or some other one that seems to have some promise, then great. If those all go up, you're laughing. Mm-hmm. But I definitely would advise you not to put money you're going to need next month to pay the rent in any of them, and that includes the stock market, because on a short-term horizon, you've got probably worse than a 50-50 chance of being out of the money at the point you need it. So be smart. Yes, it's something. It's not just air, and it's no more air than your pound or dollar is. And you just need to decide how you want to get on board here. It's an opportunity still, I think, to get in relatively on the ground floor. Bitcoins are engineered with 1 million bits in them. So each coin is 1 million bits, and then each bit is 100 satoshis, or I kind of in my mind see that as pence or pennies. Mm-hmm. So it's engineered to hold quite a lot of value without collapsing. So if those all became worth £1 each, then each Bitcoin could be worth £1 million, and each Satoshi could be worth 1 pence.
Yep. So
I like I said, don't look at it as a lottery play, in the sense that it's money you can't lose and you're gambling on it to go up, and if it doesn't, you're screwed. But if you will take a disciplined approach, even if it's only a tenner a week or a tenner a month or 50 pounds on payday, whatever you decide to do, and put it in there, you will accumulate a position, and that position, I believe, over time will appreciate.
It's funny because most of my contacts, friends in the financial world, would say that it's a complete farce, it's a Ponzi scheme, and it's guaranteed to fail. And don't be such a fool. Just don't go anywhere near it.
Well, they are only saying that because they're presiding over a Ponzi scheme themselves, and they don't want a competition. So
There you go. That's that's
like,
our assessment.
you have nothing to see
Yeah.
here. Don't go in there.
But the kind of model that I tried to give one of my friends, who will remain nameless, the other day, is that if you think of the Bitcoin similar to a diamond, I mean, there's a protected environment, there's a fixed amount, and therefore it has an inherent value,
Yes,
just because of its scarcity and the fact that you can, as you say, it's,
you can't pop them into existence without proving that you've done the work.
yeah,
And your mates aren't going to let you get away with it anyway, because they're trying to get the same coin that you're getting, and they're competing with you.
yeah,
So there is some value there, and I would argue that it's more than the value that's intrinsic in a pound or a dollar,
yeah,
because the way the dollars generally propagate through a society is that the central bank issues a certain amount, and those are taken up by the banks, and the banks can then loan them out at a rate 10 times the amount that they hold. So they basically create the zeros on the screen or pop them into existence, just so they can loan them out to you in your credit card debt or your mortgage or various other things.
right,
So it doesn't cost them anything to make those extra 10 times the money at all. There is no proof of work. There's no proof of stake. Well, I guess there's a proof of stake in the sense that they profit from it, but there's no proof that gives it any intrinsic value. It's simply zeros on a screen. And so if this whole cryptocurrency thing does nothing but help people understand that that's how the system we have now works, then I think it will have done its job, because people need to be aware of how broken and corrupt the current system is before we can ever move united to change it somehow.
yeah. Thank you very much.
Thank you.